Hello friends, welcome back to part 20 in my Tesla earnings forecast video review series. I am joined as always by my co-host, Loki, who is sleeping on the job as he normally does in bed. You can keep an eye on Loki in the Loki's bed cam down here, while I continue the tour of my detailed forecast model tab from my Tesla earnings forecast Excel spreadsheet. So we'll keep going and I'll show you what I have in this model next after the delivery section we talked about in part 19. We talked production, deliveries, and some other stuff. We just finished covering the deliveries by model, so if you missed that episode, go check it out. What's next? Well, let's talk about total automotive revenues per delivery by model before Forex. What's Forex? Forex is the industry standard jargon abbreviation for foreign currency impact. Now, the X part is for exchange, but there's two different kinds of foreign currency impacts. There's the exchange impact, which is literally, hey, we had dollars and we swapped those for euros or for yen or for yuan or whatever. Or vice versa. We had foreign currency that we swapped for US dollars, and there was an impact to our income statement from that. The other one is foreign currency translation impact. That's the big one for Tesla, at least, which is, hey, we do business in all these different countries in whatever their local currency is, because the people who work at the Shanghai Gigafactory don't want to be paid in dollars. Well, whether they would like to or not, it's against the law to pay them in US dollars. You have to pay them in yuan, and that's what stores take. That's, how their rent is denominated. So it makes sense to pay people in China in yuan. It makes sense to pay people in Germany in euros, etc. But those bank account balances in those foreign currencies and those revenues and those costs in those currencies have to get consolidated when Tesla reports how did our multinational company do on their Securities and Exchange Commission filings, the official reports to the government. If you're a publicly traded company, you have to release financial statements publicly, and there are rules for how you do that. And one of those rules is you have to translate the foreign currencies into whatever your reporting currency is. Tesla's headquartered in the US, so like all US companies I'm aware of, they report in US dollars. So that's what a foreign currency translation impact is. Why have I stripped that out of these numbers? Because what I'm trying to do here is compare across time periods whether stuff is rising or falling, etc. You don't want to make that noisy by including what the impact of changing currency values was in any given quarter, right? That's noise. You want to throw that out if you can. So I have, by using the numbers before foreign currency exchange impact here. So you can see we're looking at total revenue per delivery. So for this, you just take the revenue from that vehicle that I'm forecasting or that I have estimated for an actual time period. Again, Tesla does not report at this level of detail, so even the actual time periods are my best guess on the revenue and Troy's best guess on the deliveries that are unreported detail. So what's going on here over time? Well, the Model S peaked, it looks like in about Q3, nearly $115,000 per vehicle is what people were spending on Model S. That number has been coming down. I've got it coming down another $5,000 this quarter in Q2 versus Q1, so a sequential decline. Yeah, $5,000 on it. For Model X, I've got it coming down $7,000. From 115 to 108. That's a lot lower than it was in Q4 when that vehicle peaked in ASP. Now I've got this stabilizing for the remainder of the year for these vehicles. They're going to stay right around that level. Now maybe Tesla's advertising makes the backlog grow a lot really fast, and then by the end of Q4, Tesla could have higher prices starting to get delivered to people. But I think it's a reasonable assumption that even if that happens, Tesla will need to honor whatever price people bought their vehicles at, unless they're extremely quick to react by raising prices as soon as the advertising effectiveness becomes clear on the booking patterns, which is what you want to monitor to make sure you've got your pricing set well. What's next? Model 3. These were up around $47,000, $48,000 last year. I've got that down to 41, dropping a little bit in Q2. We've actually seen some price increases and decreases in Q2 on Model 3. I don't see it going a lot lower, so I've got that bottoming around 41.4, and then recovering a little in Q3 and Q4. What about Model Y? Again, these are blended numbers worldwide, so hard to know what's going to happen in the future. That's the whole challenge of forecasting, is that it's hard to know what's going to happen in the future. But here's what's in my forecast. Model Y last year was up around $55,000 most of the year. That was down to a little below $50,000 due to the price cuts in China. Mainly that's the place people can get Model Ys for less than 50 grand if they buy the base model. And a bunch of people do buy the base model, right? I've got that coming down another $1,000 sequentially from Q1 to Q2, and then popping back up a little bit in Q3 and Q4. What about Cybertruck? If we sell any in Q3, I've got an $80,000-ish revenue per delivery assumed in my forecast. We don't even know what the price is of Cybertruck yet. The Tesla haters, one of them in particular I'm thinking of, thinks it'll be double that amount. He thinks they're going to charge $160,000 starting price for the Cybertruck. That seems very unlikely to me to occur. Then for Semi, we don't know what Pepsi is paying for their semis that Tesla is delivering to them and has been since last year. But what I'm forecasting is that it's around $360,000. So I've got that here. That's my revenue per delivery. What about this next section? Well, the one we just looked at was by model. This next one is by option type and per vehicle. So you can see the base price has come down from a peak last year of 50 grand in Q2. You know, $8,000. That's a pretty big cut, and it's going to come down a little more over the next couple of quarters. If you look at the weighted average of all model types, with Model Y becoming a larger fraction of the total as more Model Ys get made from factories around the world, especially Berlin and Austin ramping up more, but even Shanghai is producing more Model Ys now than they ever have before. Paint, probably less people are paying for the extra paint now than they were before. Performance package, probably less people in this bear market as it continues to sour and prolong itself. Fewer people probably are paying for the performance package, or did in Q1. I've got that bouncing back a little bit here and then improving toward the end of the year. Wheels, you want to pay extra for fancy, good-looking wheels. Probably less people are doing that this year than were last year, is my assumption. Interiors, I had to bring this down in Q1 for the actuals because I overshot on revenue, thinking it would be more like these. So a bunch of these options I had to adjust downward to tie to the revenue number that actually got reported, which is down $7,000 sequentially. That's a pretty big chunk. Full self-driving probably is lower, with especially increasing sales in China and Europe, where that FSD feature set isn't as useful as it is in the US. So as the US becomes a smaller portion of the global deliveries, then the mix is unfavorable on that. Now, I've got it improving a little, not a lot. I don't think Tesla's going to miss these numbers by a ton. And again, we never get this detail to find out how we did. Even a year after the fact, we still don't get the information, even after it wouldn't be newsworthy anymore if Tesla reported it. Maybe one day that'll change. So that gives you the cash buyer ASP, what the buyer thought they were going to pay when they looked at their order config screen, the design studio. Next is the leased vehicles adjustment. You got to knock off $2,000 for people who are leasing instead of buying from the revenue per vehicle, because you're not going to get that revenue from people as automotive sales revenue. It's going to come as other revenue when you sell that used vehicle that gets returned to you after 3 years. Then the destination and delivery fee, you got to pay that, and that keeps going up every year. Regulatory credits revenue was a little higher in Q1 per vehicle than it has been since Q2 of last year. I'm assuming that number is going to drop some for the rest of the year. We'll see if regulatory credits can stay high and beat my forecast. Then for other FSD revenue, OTA upgrades, data, etc., that number ought to be okay. I've got that number continuing to rise over time as more stuff gets sold in this category. Tesla insurance is in there. Used vehicle sales, as I mentioned earlier. Then you got just a line for FSD sales plus other revenue / deferrals, in case you want to know, hey, what's the all-in FSD? I've got FSD revenue counted in two places. I've got the sale at time of delivery, at time of initial sale, and this number is mostly upgrades to FSD after the fact from people who didn't buy it when they bought their car. So you're selling FSD to the fleet of existing Tesla owners. And then the other stuff that's in here. That's how you get to the total automotive revenue per delivery, which is, down, about $7,000. So how can this number be up when that number is down? James, is your spreadsheet wrong? No, spreadsheet's not wrong. Let's go back up again, and I'll point out why I'm asking the question. Well, I've got Model S coming down, I've got Model X coming down, I've got Model 3 coming down, and I've got Model Y coming down. They're all coming down. So how can the total be going up? It's a good question. It's mix. Mix is a funny thing. The sales of S and X were very low in Q1. They're going to be higher in Q2 is my forecast. So when you do that, they become larger pie pieces of your total delivery in your pie chart, right? They get bigger, and so their weighted average counts for more towards the total average for all the vehicles combined. That's what's doing it. I got that question from somebody who did not understand. Hey, James, how can your total automotive revenue per vehicle be rising by, what is that, $100, $98? It's because I don't forecast at this level. I don't forecast in total. I forecast at a very detailed, granular level, and then I just do math that multiplies and adds stuff, and then at the end I divide to do metrics like this one, and that's why. And that's just math, folks. I can't make math make more sense to you. I can explain stuff like that, but then not everybody is very quick to catch on to stuff like that, but it's true that you can have your total average rise even as each of the items that make up the average decline. That's a real thing. Sometimes people don't understand rounding either. You have to say, sorry, rounding is a thing. Numbers don't always add up to the total at the bottom if you are only showing the first decimal of them. right? Or if you've rounded them to show no decimals, they won't they won't add up to the number you would think they would add up to based on the numbers you're seeing on the page. But it's just rounding. They're jagged decimals that you're not seeing on the page in front of you, and those explain why the total is a different number than it would appear ought to be the total. All right, so what's in this next section? GAAP earnings per delivery. So this number was down a lot, less than $6,000 worth of GAAP earnings per delivery, about $7,000 worth of non-GAAP earnings per delivery in Q1. I do have these rising. These are all in. These are from every division, including Tesla Energy, which ought to be contributing more profit in Q2 than it was in Q1, as the Lathrop Megapack factory, or Megapactory for short, puts out more output and gets more units installed and put into service that they can declare the revenue from as being earned. Next is the adjusted EBITDA per delivery. That number was up around 14,000 last year. We started the year only around 10,000 for adjusted EBITDA per delivery. But as Tesla delivers more vehicles, the volume ought to get better. And as we've just seen, the rate shouldn't be bad going forward unless Tesla needs to cut prices a lot more again, which is possible. Then we've got EBIT per delivery. That number's down to about $7,500 per vehicle in Q1. I have that continuing to rise throughout the remainder of the year. Okay, let's look at some 12 trailing month metrics here. We've got a deliveries number. This is a volume metric. So Tesla passed 1 million at the beginning of last year, 1.061. In 2021 full year, Tesla delivered 936,000 vehicles. And since then, their 12 trailing month deliveries have exceeded 1 million. So as rows like this, I have it continuing to rise through the remainder of this year, as shown. Then for the 12 trailing month revenue, well, it ought to be rising along with the deliveries, right? And that's what you're seeing here. Tesla ended 2022 with $81.5 billion worth of revenue. Then in Q1, revenue increased over the prior year by $4.5 billion. So what's that do? That quarterly year-over-year increase gets added to the prior quarter's 12 trailing month average to become the new 12 trailing month average, 86 billion, or not average, but total, 12 trailing month total revenue. So what about in Q2? I've got that going up to almost 100 billion. In Q3, I have it going up to 112 billion, and in Q4 up to 125 billion dollars. That'll be a 50% revenue increase in 2023 over 2022. Not bad in one of the worst economies the U.S. has been in for a long time. If it gets anywhere close to that number, right? Am I promising 125 billion will happen in revenue? No. Would 115 billion be a disaster? No, absolutely not. That would be fine. That would still be a really decent year-over-year increase in revenue. Then we've got the 12 trailing month adjusted EBITDA numbers here. So that was 16, 17, 18, 19. This number did fall from Q4 to Q1, which means year-over-year Q1's adjusted EBITDA fell by 0.8. But I have that rising over the remainder of the year, ending the year up around 25 billion worth of adjusted EBITDA. So you can see that adjusted EBITDA margin would be a little over 20% based on the fraction of these two. Then you got the 12 trailing month non-GAAP earnings per delivery. So that number is less than 10,000 now. Last year it was more than 10,000. But shouldn't fall very far to the consternation of Tesla Q. Shortville wants this number to fall to 0, and it's just not going to do it. It is not going to fall to 0 earnings Even though that's what Brad Munkin predicted when he was on George Noble's podcast in December, and then again on George Noble's podcast in January. He said he thought Tesla would lose money in 2023. He's off to a bad start. Tesla made money in Q1, and Q1 was a real tough quarter with limited production output. So best of luck to you, Brad, on Tesla managing to lose money somehow by the end of the year. I'm not saying it's impossible. I'm not saying a force majeure couldn't happen that would cause Tesla to lose money this year. I'm saying I find it extremely unlikely that a scenario will occur where Tesla loses money this year. Then we've got revenue by type here. So these are revenue dollars, not per vehicle. So these are, yeah. Just a breakdown that includes the regulatory credits. So in the top section, you can see the income breakdown by type. But it's not giving you the regulatory credit sales excluding currency translation impact and the automotive sales excluding regulatory credits. In case you want these numbers, here they are, excluding currency translation impacts separately. Then we've got the costs and the expenses by type. And what am I doing with this information? I'm using them to make those penny charts. Those how does Tesla make its average dollar of revenue and how does Tesla spend its average dollar of revenue. Then I put those onto a 12 trailing month basis to smooth them out so they aren't very jagged every quarter as stuff jumps around. That helps the visual look a little smoother. And probably I'll just stop right there and call this episode 20. I'll check back in with Loki and see that he has done nothing but stay curled up in bed this whole time. And I'll outro and say if you've enjoyed today's video, don't forget to click the like button. It's free to click the like button no matter what platform you're viewing this on, Patreon, YouTube, or Twitter. And thank you to everyone who supports me on those platforms, especially my executive producers, Kathy Kitchler and Rebellionaire.com, and I'll see you in the next one.